Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 12th of March 2022, and we're publishing our gold and silver weekly update for the week ending the 11th of March. Now, what a dynamic week we've just witnessed. Soaring gold and silver prices, only to see them fall right back again, and then attempt a very modest recovery. Now, yesterday we published a video entitled, How the Next Geopolitical Move Will Affect Gold and Silver Prices. And on Thursday, gold and silver's meteoric rise stalled by an interview and CPI figures today. Now, if you haven't seen these videos, we strongly urge you to do so, as they explain much of what happened last week. And we've placed links in the description box below. So let's now take a look as to what's happened to precious metals, other asset classes, and what we're expecting this coming week. Well, first gold and silver. Gold rose $17 last week, rising from $1,971 to $1,998, having hit a high of, wait for it, $2,070 and a low of $1,959, a rise by the end of the week of 0.9%. In sterling terms, gold finished at £1,524. That's up £35. And in euros, it closed at €1,821. That's up €19. Silver rose 12 cents, rising from 25.76 to 25.88, having hit a high of 26.96 and a low of 25.32, a rise of 0.5%. In sterling terms, silver closed the week at 19.85, that's up 38 pence. And in euros, it closed at 23.72 euros, that's just up 0.16 euros. The gold to silver ratio rose slightly, from 76.5 to 1 to 77.2 to 1. Bitcoin rose $50 and currently stands at $39,140, though it did have a little bit of a rally earlier in the week, but has since fallen back. Now equities, not performing particularly well, but not disastrously so far. The Dow Jones closed on Friday at 32,944. That's down 230 points on the day and down 670 points on the week. The S&P 500 closed at 4,204. That's down 55 points on the day and down 124 on the week. And the Nasdaq Composite closed at 12,843, down 286 points on the day and down 470 points on the week. There was an attempt at a rally on Thursday, but it just petered out. Oil prices. Now, we did see both Brent crude and WTI crude go above $125. However, Brent crude closed the week at $112.67, that's down $5.44, and WTI crude closed at $109.33, that's down $6.35 on the week. The dollar index stands at 99.12, that's up 0.48 on the week. And if we were into gambling, we'd be taking bets on whether we think the dollar index is going to touch 100 this week. We suspect that it might. Whether it will hold there is another matter. Now, we concluded last week's video with the following forecast. We see gold trading between 1925 and 2025, with 1900 and 2050 as outliers. We see silver trading between 2450 and 26, and 24 to 27 as outliers. While gold closing at 1998 falls well within our trading range, though admittedly on Wednesday, before President Zelensky's news interview that he was prepared to talk with the Russians over a deal, we saw gold actually spike some $20 above our outlier range, only to fall back again to average levels once the interview had been published. Silver, closing at $25.88, again fits in well with our normal trading range. But like gold, spiked on Wednesday to $26.96, within 4 cents of our outlier range. We're so pleased. Again to fall back ending a rather turbulent week just 12 cents higher. The disparity between silver's high and low was $1.64. Now again, the Russia-Ukraine conflict reached new heights and new threats, and it certainly appeared until Wednesday at least that the escalation could only intensify. Then Zelensky made his statement, and everyone thought that this was the potential end of the conflict, especially when it was muted again late Thursday, early Friday, that Vladimir Putin also suggested that he was interested in a deal. Now, as we published in our video yesterday, do not be taken in by this, and we think we were borne out when his deal, when declared, would be totally unacceptable to both Ukraine and the West. Now, in last week's update, we stated that we should closely watch the CPI figures on Thursday, and yes, they were the important economic data release for last week. We saw CPI year over year rise to 7.9% in February, compared with 7.5% in January and against expectations of 7.8%. And with what's been happening to prices globally and oil prices in particular, we suspect that March's figures will be even higher. This alone is enough to guarantee an interest rate rise on Wednesday, and this is what markets are now expecting. Interestingly, consumer credit was also down considerably in February at $7 billion, compared with January's $19 billion and against expectations of $23 billion. Now, this coming week, we have the following data announcements. On Monday, nothing scheduled. Tuesday, the Producer Price Index for February and the Empire State Manufacturing Index for March. Then on Wednesday, we have retail sales for February, Import Price Index for February, and the all-important FOMC announcement on interest rates. Thursday, weekly jobless claims, Philadelphia Fed Manufacturing Survey for March, and industrial production for February. Important in themselves, but it will be totally overshadowed by the FOMC statement. And on Friday, we have the index of leading economic indicators for February. So Wednesday is the day with an interest rate decision, plus comments from Fed Chair Jerome Powell, supported by the retail sales figures. So what is gold looking like technically? Well, certainly after its recent rise, there has been an element of profit taking. Also, the dollar index above 99, and the prospects of interest rate rises on Wednesday, and probably a rather hawkish Fed statement, all act as headwinds for gold and silver prices. The tailwinds for gold and silver are undoubtedly the situation in the Ukraine and current runaway inflation. So we have to attempt and calculate which will have a more powerful impact, the headwinds or the tailwinds. If we felt the Ukraine situation was over or near to being over, we know which side we would be backing right now. But unfortunately, we have a potentially unpredictable Russian president who may decide to up the ante. We know he's not afraid to be aggressive, but we have to hope that he's not also totally bonkers. So looking at the technicals, we have strong support at 1920 and 1900 for gold, with probably, at least very short term, impenetrable support at the moment of $1,850. There will be resistance at 2,000, but relatively weak, and stronger resistance at 2040. And then, of course, the all-time high of 2067. Silver prices have settled at just above the 2580 support level, with the next technical support level standing at 2560, then 2530, with the 20 EMA below that at 25, and quite strong support then at 2470. So there are quite a few technical support levels to break below. We have resistance at 26 up to 2615, with, of course, as we saw this past week, super strong resistance at $27. So, assuming there is no peace negotiated this week, which we believe is still unlikely, we see gold trading between 1920 and 2020, with 1,880 to 2,070 as ultimate outliers. We see silver trading between $25 and $27, and $24 potentially, and $27.50 as outliers. We're expecting quite a large amount of oscillation between highs and lows again this week. Not necessarily quite as large as last week, but they can be significant, or certainly the seesaw effect. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.